Una sa lahat, gusto ko munang pasalamatan lahat po ng aking mga viewers. Maraming salamat po sa panunood ng aking mga video lectures. Another topic on inventories, and this time, ang pag-uusapan natin ay lower of cost and net realizable value. This is also what we call LCNRV. So, kailan ba natin ginagamit itong LCNRV? Ikaw na accountant, kapag mag-prepare ka na ng financial statements ng company or ikaw na accountant ng iyong mismong company, ang value ng inventories na dapat mong ipapakita sa iyong financial statement, specifically on your income statement at ang iyong balance sheet, ang gagamitin mo ay itong LCNRV. So ano ba itong LCNRV? Kilalanin muna natin ang cost at ang net realizable value. So, ano ba itong cost ng inventory natin? Itong cost ng inventory natin, ito yung puhunan natin sa ating inventory. So, kasama dito sa cost ay ang cost ng iyong purchases. So, aside from the cost of the purchases, other costs incurred in bringing these inventories to their present locations and conditions, kasama din pa rin yan sa ating cost. Lahat po na may incur to bring this sa kanilang warehouse o bodega para maibenta nila ito, kasama yan sa puhunan ng inventory. Kapag manufacturing business naman, kasama sa puhunan ng iyong goods ay yung cost ng conversion. Yung cost of conversion, ito yung mga direct labors at saka mga factoring overhead sa pag-convert ng finished product para maibenta mo yung mga goods na yan. Kasama yan sa puhunan ng iyong goods. Ito ang mga amounts na kinakapitalize natin sa cost ng ating inventories. Ito ang tatandahan mo sa iyong cost. Itong amount na cost na ito ay recorded na ito sa books ng company. So, yan na ang amount na nakasaad doon sa kanyang books or recorded sa books ng company. So, ano naman po itong net realizable value? Itong net realizable value naman ay hindi recorded sa books ng company, kundi ini-estimate ito at the end of the year. Ikaw na accountant, kapag mag-prepare ka na ng financial statements ng company, yung income statement niya at saka statement of financial position, you are going to estimate the net realizable value of the inventories. So, paano mo ba ito i-estimate yung NRV or net realizable value ng inventories? Mag-uumpisa ka po sa estimated selling price ng mga inventories. From that estimated selling price, dinideduct po natin ang estimated cost of completions. Siyempre, hindi mo naman ito maibebenta kung hindi ito kompleto. Then, after that, we are also going to minus the estimated cost of disposal. Estimated selling price minus the estimated cost of completion and the estimated cost of disposal. After this, we will come out with the net realizable value. Ang value ng inventories na ipapakita natin ay yung lower of this cost or the net realizable value. Kung sino ang mas mababa sa dalawang amount na ito, yan dapat ang value ng inventories mo sa iyong financial statements. So, ganito po natin ina-apply ang LCNRV. Ganito ang pag-apply ng ating lower of cost and net realizable value. So, what if the cost is less than the net realizable value? So, mas mataas yung net realizable value kesa sa cost. So, let's say, for example, we have a cost of 20,000. Then, meron tayong net realizable value na 35,000. So, ang ibig sabihin, meron silang difference na 15,000. Applying the LCNRV valuation methods, kung ganito ang problem natin, i-value natin ang ating inventories at cost. Dahil ang mas mababa ay si cost. itong cost na ito, recorded na ito sa books ng company. So therefore, wala na tayong adjustment kasi naka-record na siya at cost. Yung difference niya na 15,000, hindi po natin i-recognize yon dahil wala tayong adjustment na kailangan. Now, what if the cost is greater than the net realizable value? Mas mataas ang cost kaysa net realizable value. Dahil LCNRV ang valuation method na ginagamit natin, then i-recognize natin ngayon ang inventories at net realizable value. Let's say, for example, we have a cost of 20,000. Then we have a net realizable value of, let's say, 15,000. Mas mababa kaysa sa cost. So there's a difference of 5,000. Kung ang cost ay mas mataas kaysa sa net realizable value and we are using the valuations LCNRV, iba-value natin ang ating inventories at net realizable value kasi mas mababa siya. Therefore, if we are going to measure this inventory at net realizable value, yung difference, kailangan natin siyang i-adjust. Dito sa example na ito, kung saan ang cost mo ay mas mataas kaysa net realizable value, to recognize this difference, we have two methods na pwede natin gamitin. And these two methods are direct methods and the other one is the allowance method. So ganito po ang concept ng ating lower of cost or net realizable value. Paano ba itong direct method at allowance method? Kapag ikaw na accountant magpre-prepare na ng financial statements ng company, ang valuation method gagamitin mo with regards to the inventory ay ang LCNRV. So what if the cost is greater than the net realizable value? Gaya ng ating illustration or example dito. Mas mababa yung net realizable value. Ang cost, yan na ang naka-records sa books ng company at i-measure natin inventories natin at net realizable value, kailangan natin siyang i-adjust. So the difference will be recognized. So adjustment is needed and the difference should be recognized. So paano natin gagawin yon? Mayroon po tayong dalawang method. Yan po ay yung allowance method at ang direct method. Allowance method is also known as the loss method. On the direct method naman this is also known as the cost of goods sold method. So dito sa allowance method, magkakaroon tayo ng account na tinatawag na allowance for inventory write-down. Yan ang gagamitin natin na account sa pag-adjust dito sa difference ng cost at net realizable value. Dahil ang ni-record natin ay 20,000 at i-measure natin ang ating inventories ng net realizable value na 15,000, ang difference na 5,000 ay i-adjust natin using the account allowance for inventory write-down. Kasama nitong allowance for inventory write-down ay loss on inventory write-down. Magkakaroon din tayo ng account na tinatawag na gain on reversal of inventory write-down. So, yan po ang allowance method natin. Under direct method naman, itong loss and gains on reversal, dito naman sa direct method, itong loss or gain on reversal of inventory write-down is not accounted separately. So, kung hindi mo siya ina-account, nababury ito sa cost of goods sold. Kaya nga, ang tawag dito ay cost of goods sold method. Alright, so ito po ang ating allowance at direct method. Mas maiintindihan mo ito kapag meron tayong illustrations. So, paano natin pinipresent itong lost on inventory write-down na account at itong gain on reversal of inventory write-down as well as our account allowance for inventory write-down. Alright, so ito ang example natin sa ating practice questions on LCNRV. So, we have 4 years. We have at the end of the year of December 31st, year 1, year 2, year 3, and year 4. Then we also have our cost of the inventory as well as the net realizable value of the inventory. So we'll start with year 1. On December 31st, year 1, there's a cost of 20,000 and a net realizable value of 15,000. Using the lower of cost and net realizable value, ang ating LCNRV ay 15,000 kasi yan ang mas mababa sa dalawang amount na yan. We have two method na pwede natin gamitin, ang allowance method at ang ating direct method. Alright? Under allowance method, ang una natin gagawin is i-close muna natin ang ating inventory ending. Using our allowance method, kino-close natin ang cost. So our entry to close our ending inventory, debit to inventory ending and credit to our income summary. Dahil mas mababa ang net realizable value kesa sa cost, meron siyang difference na 5,000. Yung difference na 5,000, nagkaroon ng loss. So, itong loss na 5,000, i-write down natin ang ating inventory and we are going to recognize a loss on inventory write-down na account. So, our entry to recognize this loss is debit to lost on inventory write-downs at credit to allowance for inventory write-down. Yung account na lost on inventory write-down, kasama siya sa pag-compute ng cost of goods sold. Alright? Yung cost of goods sold is under the income statement. Ito namang account na allowance for inventory write-down, this is contra account of your inventory sa balance sheet. At ito pinapakita sa ating balance sheet or statement of financial positions. Ang direct method, nag-close siya ng kanyang ending inventory at LCNRV. On this case, on year 1, ang LCNRV natin ay yung 15,000. So we debit inventory ending of 15,000 and we credit our income summary of 15,000. So the difference between these two method is sa allowance method, nag-close siya ng kanyang ending inventory at cost. Sa direct method naman, nag-close siya ng kanyang ending inventory at LCNRV. Kung ano yung mas mababa, yun ang kino-close niya under direct method. Sa allowance method, dahil hindi niya kino-close sa LCNRV, so meron pa siyang magiging adjusting journal entry. The LCNRV on this year 1 is the 15,000, magkakaroon ng loss na account si allowance method. So we debit our loss on inventory write-down na difference na 5,000 and we credit our allowance for inventory write-down. Itong loss on inventory write-down ay kasama sa pag-compute ng iyong cost of goods sold na binabawas natin sa ating net sales. Alright? Then, ang allowance for inventory write-down naman ay ipinapakita as a contra account ng ating inventory sa ating balance sheet. So, ganito ang magiging income statement natin under allowance method at under direct method. Alright, ganito ang income statement ng year 1. So, sinulat ko na dito ang format ng ating income statement. Alright? Sa income statement, nag-uumpisa tayo sa sales. Alright? Then, we less our sales discount and sales return and allowances. Alright? Then, we come up with our net sales. So, shortcut ko na po ito. So, we start with the net sales and then we less our cost of goods sold. Yung net sales, yan po yung pinagbentahan natin. Alright? Then, cost of goods sold, yan po yung puhunan natin sa ibinenta natin. Then, yung gross profit natin, yan po ang ating tubo sa ating naibentang mga goods. So, let's say, for example, we have a net sales of 200,000 on year 1. from our net sales, we less our cost of goods sold. Sa cost of goods sold, mag-uumpisa tayo sa inventory beginning. Dito sa allowance methods, pinapakita ang beginning inventory at cost. Dahil first year ito, let's say for example, wala pa siyang beginning inventory. So we have a zero beginning inventory. Then let's say we have a net purchases of 150,000. So net purchases, we start with the purchases, we add our freight in, then we less our purchase discount, then we less our purchase return and allowances. So we come up with cost of goods available for sale of 150,000. Now, the ending inventory at cost on December 31st of year 1 is 20,000. So we will less this ending inventory at cost of 20,000. So ang ibig sabihin, meron tayong nabenta na 130,000 before the write-down. Dito na natin i-adjust ang ating inventory. Ang account na lost on inventory write-down is additional to your cost of goods sold before the write-down. It's additional kasi itong dalawang amount na ito, ma-minus natin sa ating net sales to get our gross profit. So we add our account lost on inventory write-down na magkano yun? 5,000. So we have 135,000 cost of goods sold after the write-down. Yan po ang ating cost of goods sold na mina-minus natin sa ating net sales to get our gross profit. So ang gross profit natin sa year 1 ay 65,000. Okay, under direct method, we have a sale of 200,000. Then, we less our cost of goods sold. Mag-umpisa tayo sa ating inventory beginning. Wala pa tayong beginning inventory dahil first year nga siya. Then, we have our net purchases of 150,000. Then, we have our cost of goods available for sale na 150,000. Then, we will minus our inventory ending na close natin sa ating direct method yung net realizable value of 15,000 kasi yan ang mas mababa. So, we less our ending inventory of 15,000. So, we come out with the same amount of cost of goods sold na 135,000. So, we will have a gross profit of 65,000. So, parehas lang po ang magiging end result ng allowance methods at direct method. Nagkakaiba lang sila sa pag-present ng kanilang mga accounts sa income statement. So, under allowance methods, ang inventory beginning is at cost at ang inventory ending is at cost. Then, sa baba ka na mag-a-adjust ng iyong cost of goods sold. Under direct method naman, ang beginning inventory ay at LCNRV, kung ano yung mas mababa sa dalawa. Yun po ang magiging amount ng iyong inventory, beginning at ending. Then, we will come out with the same result, gross profit of 65,000. Paano naman ang balance sheet presentations? Alright, ganito naman ang balance sheet presentation ng year 1 on the allowance method. Alright, sa allowance method, ipinapakita ang inventory ending at cost. So, sa year 1, we have a cost of 20,000. Then, meron tayong account na allowance for inventory breakdown na 5,000. Nililess po natin yan. So, we come out with the inventory ending at net realizable value of 15,000. So, pinapakita dito sa balance sheet ang inventory ending at net realizable value. Dito naman sa direct methods, ang inventory ending natin kaagad ay yung 15,000. Kasi yan po yung mas mababa sa dalawang amount na yan. Kasi yan po ang ating LCNRV. Dinidisclose mo as an accountant sa iyong notes to financial statement kung ano ang inventory ending at cost at kung ano ang inventory ending at net realizable value. Kung paano ka nag-end up measuring your inventory ending at 15,000 na LCNRV. Alright, so they end up on the same amount. Magkaiba lang sila sa presentation. Paano naman ang year 2? So, sa year 2 naman, we have on December 31st, year 2, we have a cost of 30,000 and a net realizable value of 20,000. So, meron siyang difference na 10,000. Under LCNRV, i-measure natin ang ating inventories at net realizable value of 20,000. So, under allowance methods, ang pag-close ng ating inventory ending sa ating income summary is at cost. So, we debit our inventory ending of 30,000 and we credit our income summary of 30,000. Dito sa allowance methods, meron pa tayong another adjusting journal entry para i-write down natin itong ending inventory at cost na 30,000 into the net realizable value of 20,000. Ang difference na 10,000, yan po ang ating required ending balance ng ating account na allowance for inventory write-down. So, kung ang required ng year 2 ay 10,000 na ending balance at meron na tayong balance from last year, beginning balance of this year na 5,000, dadagdagan natin ng another 5,000. So, magre-recognize ulit tayo ng lost on inventory write-down na 5,000 additional. So, we debit our loss on inventory write-down on year 2. And we credit our allowance for inventory write-down. Then, under direct method naman is we close our ending inventory at LCNRV. So, ang LCNRV ng year 2 ay yung 20,000. So, yun ang i-close natin as our ending inventory under direct method. So, we debit our inventory ending of 20,000. And we credit our income summary of 20,000. Alright? Dito sa direct methods at LCNRV ang amount niya na kinu-close niya sa inventory ending. Dito naman sa allowance, ang kinu-close niya ang ending inventory niya is at cost. Tapos meron siyang another adjusting entry sa kanyang allowance for inventory write-down. Yung loss na inventory write-down, yan po ay kasama sa ating cost of goods sold computations. Dito naman sa allowance for inventory write-down, this is your contra account of your inventory. So the required on year 2 is 10,000 on the account allowance for inventory write-down. Alright? Paano natin ito pinipresent sa ating income statement? Income statement ng year 2. So under allowance method, for example, we have net sales of 325,000. Ngayon, ang magiging beginning inventory natin at cost ay yung ending inventory natin last year. Yan ang magiging beginning inventory natin. So, ang beginning inventory natin for this year will be 20,000. Yan yung ending inventory natin last year. So, magiging beginning inventory yan ng year 2. Then, we add our net purchases. Let's say, for example, meron tayong net purchases of 250,000. So, meron tayong cost of goods available for sale na 270,000. Then, we minus our inventory ending at cost na 30,000. So, ang cost of goods sold natin before ng adjustment natin sa write-down ay 240,000. Then, meron tayong account na lost on inventory write-down na 5,000. Okay? I-add po natin yan sa cost of goods sold before the write-down kasi yung dalawang yan ay ima-minus natin yan sa ating net sales to get our gross profit. So, we add our loss on inventory write-down of 5,000. Then, we'll come out with 245,000. So, itong 245,000, yan po ang ating cost of goods sold after the write-down. Then, we'll come out with the gross profit of 80,000. Alright? Then, ang income statement naman ng direct method is we have a net sales of 325,000. Our beginning inventory will be at the LCNRV. So, yung beginning inventory ng direct method is the 15,000. We add our net purchases of 250,000. We come out with a cost of goods available for sale na 265,000. we minus our ending inventory at LCNRV. On the year 2, ang LCNRV natin ay yung 20,000. So we have 245,000 as our cost of goods sold. So we will come up with the same gross profit of 80,000. Nagkakaiba sila sa presentations ng kanilang income statement. Then ganito po ang ating balance sheet. Alright, balance sheet ng year 2. Ang inventory ending natin at cost ay 30,000. At ang allowance for inventory write-down natin ay 10,000. Yung difference niya, yung required ending balance ng ating allowance for inventory write-down na 10,000. Alright? So we have a ending inventory at net realizable value of 20,000. On December 31st of year 2, our cost is 30,000 and our net realizable value is 20,000. Under LCNRV, you are going to measure your inventory at 20,000 kasi yan ang mas mababa. So, ang presentations ng allowance method is the ending inventory at cost na 30,000 at saka ililes natin yung account na allowance for inventory write-down. Then we will end up with the net realizable value na 20,000. So, direct method naman, LCNRV na kaagad. Alright? Wala siyang allowance na account. So, on year 2, the LCNRV ay yung 20,000 na net realizable value. So, ganyan po ang presentations ng direct method at ng allowance method. Paano naman ngayon ang year 3? On December 31st, year 3 of costs of 35,000 and a net realizable value of 28,000. So, ang difference niya this time is 7,000. Ang una natin gagawin, i-close muna natin ang ating ending inventory. Under allowance method, we debit our inventory ending and credit our income summary at cost. Dahil mayroong difference na 7,000, yan po ang required na ending balance ng ating account na allowance for inventory write-down. So, paano natin i-adjust itong account na allowance for inventory write-down? Dahil meron tayong 10,000 from last year and then mas mababa ang required sa year 3, magkakaroon tayo ng gain on reversal of inventory write-down. So, ano magiging entry natin dyan? Our entry will be debit to allowance for inventory write-down na magkano? 3,000 ngayon. Kung ang ending balance mo dapat ay 7,000, babawasan mo yung beginning balance na 3,000. So, yan naman ay gain natin. Gain on reversal of your inventory write-down. Under allowance methods, kinu-close natin ang ating ending inventory at cost of 35,000. Tapos may kasama siyang adjusting journal entry ng iyong account na allowance for inventory write-down. This time, ang required on year 3 is 7,000. Ang beginning balance ng account na allowance for inventory write-down ay 10,000 from last year's requirement of 10,000. Yan ang magiging beginning balance ng next year. So, kung ang required ay 7,000, babawasan natin siya ng 3,000. So, kung babawasan mo ang allowance for inventory write-down, magkakaroon ka ngayon ng gain on reversal of inventory write-down. Our entry or adjusting journal entry is debit to the allowance for inventory write-down of 3,000 and credit to the gain on reversal of inventory write-down na 3,000. This allowance is still a contra account of your inventory. Ito namang gain on reversal of inventory write-down kasama yan sa computations ng iyong cost of goods sold. Under direct method naman, ang kinu-close sa ating inventory ending ay yung LCNRV. On year 3, ang mas mababa sa dalawang amount na yan ay 28,000. So, we debit our inventory ending at 28,000 and we credit our income summary of 28,000. Wala siyang allowance na account kasi direktang yun na ang pinapakita mo sa iyong ending inventory na amount. So, ang income statement naman ay ganito. Okay, income statement naman ng year 3. On allowance method, let's say for example, we have net sales of 500,000. and less our cost of goods sold, we start with beginning inventory at cost of 30,000. Then we add our net purchases. Let's say, for example, we have a net purchases of 400,000. So, ang cost of goods available for sale natin ay 430,000. Then we will less our inventory ending at cost of 35,000. So we will have a cost of goods sold before the write-down of 395,000. Alright, now this time we have an account gained on reversal of inventory write-down. Itong gain on reversal of inventory write-down, this is a minus on your cost of goods sold before write-down. So our gain on reversal of inventory write-down is 3,000. So we have 392,000 na cost of goods sold after the adjustment of the write-down. So we have a gross profit on year 3 of 108,000. Under direct methods, we have a net sales of 500,000. Then we less our cost of goods sold. Mag-umpisa tayo sa beginning inventory. Under direct methods, ang beginning inventory nila ay 20,000. Then we have our net purchases of 400,000. Then we will have our cost of goods available for sale na 420,000. Then we minus our ending inventory at LCNRV under direct method of 28,000. Then we come out with the cost of goods sold na 392,000. And the gross profit of 108,000, same as the allowance method. So, kahit na anong method ang gagamitin mo, parehas lang ang kanilang end result. Ang balance sheet naman ay ganito. On year 3, on December 31st of year 3, we have a cost of 35,000 and a net realizable value of 28,000. Alright? So, under LCNRV, we are going to measure our inventory at net realizable value kasi mas mababa yan. Under allowance methods, our inventory ending at cost will be 35,000. At ang allowance for inventory write-down natin ay yung ending balance na 7,000. So we will have ending inventory at net realizable value of 28,000. Dito naman sa direct method, LCNRV na kaagad. So ang ibig sabihin ko ano yung mas mababa sa dalawa, yun ang ending inventory ng direct method. Yan po ang ating balance sheet ng year 3. So, paano naman ang ating year 4? So, year 4 naman, we have December 31st of year 4, we have a cost of 50,000 and we have a net realizable value of 60,000. Using LCNRV valuation method, i-measure natin ang ating inventory ending at cost. Not net realizable value this time. Kasi mas mataas ngayon ang net realizable value. So, under allowance method, ang ating closing entry ng ating inventory ending sa ating income summary ay debit to inventory ending at cost of 50,000 and credit to income summary of 50,000. Now, dahil ipapakita natin ito sa ating balance sheet na 50,000 ang ating ending inventory, that means wala na tayo dapat na contra account na allowance for inventory write-down. Dahil meron pa tayong balance sa ating account na allowance for inventory write-down na 7,000 from last year of year 3, ang gagawin natin dito is i-zero out na natin. Bakit? Kasi wala na tayo dapat na contra account na minus natin sa cost ng inventory. So, paano natin i-zero out ang ating allowance for inventory write-down? Ang ibig sabihin, magdi-debit tayo ng 7,000. At itong 7,000 ay magiging gained on reversal of inventory write-down natin. So, our adjusting journal entry will be debit to the allowance for inventory write-down of 7,000 and we credit our gain on reversal of inventory write-down. para ma-zero out natin yung account na allowance for inventory write-down. Dito naman sa direct method, ang i-close nating ending inventory is the LCNRV. This time, on year 4, the LCNRV is the cost of 50,000. So we debit our inventory ending of 50,000. Then we credit our income summary of 50,000. So ganito ang income statement natin. Alright, income statement ng year 4. Under allowance methods, let's say for example, meron tayong net sales na 650,000. Then we less our cost of goods sold. Our inventory beginnings is always at cost kapag under allowance method. Then we will do our adjustment sa baba. So our inventory beginning at cost ng year 4 ay 35,000 from last year. Then let's say for example, meron tayong net purchases na 500,000. We come up with cost of goods available for sale na 535,000. Then, of course, our ending inventory is at cost, the 50,000. Then we'll come up with a cost of goods sold before the adjustment of the write-down of 485,000. Then we will minus our gain on reversal of inventory write-down na account, 7,000. Alright, bakit natin mina-minus yung gain on reversal? Para mas maliit ang ima-minus or i-deduct natin sa net sales. Therefore, ang magiging gross profit natin ay mas mataas. So, we have 478,000. So, we have 478,000 of a cost of goods sold after the gain on reversal of inventory write-downs na adjustment natin. Then, we will come up with the gross profit of 172,000. Under direct method naman is we have a net sales of 650,000. And then we have an inventory beginning is 28,000 from the last year na ending inventory. Then we add our net purchases of 500,000. So we come up with the cost of goods available for sale na 528,000. Then we will less our ending inventory on the year 4. This time, ang LCNRV ng year 4 ay yung cost. So ang ending inventory natin this time on the direct method is 50,000, yung cost. Then we will have a cost of goods sold of 478,000. And we'll have our gross profit of 172,000. Parehas lang ang end result ng direct method at allowance method sa income statement. Nagkakaiba lang sila sa presentation. Ang balance sheet naman ay ganito. Alright, last year balance sheet tayo. So, sa last year, we have a cost of 50,000 and a net realizable value of 60,000. Under LCNRV, we are going to measure our inventory at cost, 50,000. Alright? So, meaning to say, wala na tayong account na allowance for inventory write-down. Kasi, i-value natin ang ating inventory at cost. Yan na po yan. Wala na tayong contra account kasi hindi natin i-value ang ating inventory sa net realizable value. Because this time on year 4, mas mataas ngayon ang ating net realizable value. So yung naiiwan last year na allowance for inventory write-downs ay sinero out na natin. Kasi kung hindi natin isi-zero out yon at i-contra account mo dito sa iyong inventory ending, mababawasan ang iyong inventory at cost. Alright? Iyan ang dapat nating i-measure sa ating inventory. Then, sa direct method, ang LCNRV ng year 4 ay yung cost. Alright? So, we have inventory ending na cost na 50,000. So, ganito po ang ating LCNRV. Let's have a summary of the two accounts, loss on inventory write-down at saka yung gain on reversal of inventory write-down. So, ito ang summary ng dalawang account na ito. So, kapag nagkakaroon ng loss on inventory write-downs, yan po ay pinipresent natin sa ating cost of goods sold, which is part of our income statement. So, this is an addition to the cost of goods sold before the adjustment of this loss on inventory write-down para makuha natin ang ating cost of goods sold after the write-down. Yung cost of goods sold after the adjustment of the write-down, yan na po yung minaminus natin sa net sales to get our gross profit. Kapag nagkakaroon tayo ng loss on inventory write-down, that is an increase to the account allowance for inventory write-down. To recognize this loss on inventory write-down, we debit our loss on inventory write-downs and we credit our allowance for inventory write-down. So, nag-i-increase ang ating account na allowance for inventory write-down. Yan po ay contra asset or contra account of your inventory on your balance sheet. Ang effect naman ng ating account na loss on inventory write-down ay decreased in our gross profit. Kasi ito ay addition ito sa ating cost of goods sold na minaminus natin sa ating net sales. Kaya ang effect niya sa ating gross profit ay decrease. Ito namang ating account na gain or reversal of inventory write-down. This is a deduction to our cost of goods sold before our adjustment on the write-down. Kapag meron tayong account na gains on reversal of inventory write-down, yan po ay nagdi-decrease ang ating account na allowance on inventory write-down. Ang entry kasi natin doon is we debit our allowance for inventory write-down and we credit our gains on reversal of inventory write-down. Ang effect naman ng account na ito sa ating gross profit ay increase. Bakit increase? Kasi minaminus yan sa ating cost of goods sold. Therefore, kapag minus mo sa cost of goods sold, mas maliit ang dinideduct natin sa ating net sales. Therefore, kapag mas maliit ang dinideduct natin sa ating net sales, then mas malaki ang ating gross profit. So, ganito po ang ating lower of cost and net realizable value. Sana nakatulong po ito sa iyong pag-analyze ng topic na lower of cost and net realizable value or what we call LCNRV. Alright? I'll see you on my next video.